Bitcoin is currently breaking below $70,000, and this is a very key area on the chart because this is the all-time high from 2021. So this is the first retest of the prior cycle high. This is a very, very important level for Bitcoin because if you actually look at the past bear market and how price reacted, you can see that it came down to the high of 2017 before obviously going and making new highs. So historically, in Bitcoin cycles, the retest of the prior cycle all-time high has been very, very key. So I want to answer the question in today's video. Are we going to see a reaction at this level here like we've seen in previous cycles, or are we going to go lower on Bitcoin? And I'm going to give you two opinions because on one hand, I do think this does signal a great opportunity to accumulate. But on the other hand, I'm still a little bit worried about what's happening in the crypto space at the moment. So I'll break down both of those opinions and then get into exactly what I'm doing. So make sure, I wasn't actually going to record today, but I'm coming here with an emergency video because we need to talk about the market right now, and it's going even lower now that I've started recording. So make sure to subscribe, turn the post notification bell on. If you've been watching the videos throughout the entire week, you'll know we've been talking about this downtrend, and I've been saying, like, unless we can get above the H1 noodle, unless we can flip this 78K pivot level, then Bitcoin is likely going to keep trending to the downside. So you're not doing anything spectacular to call the market here, just really looking at trading momentum. And it's going to be the same approach that I take over the next few weeks. Like right now, Bitcoin is making lower highs and lower lows. I'm not going to flip bullish, and I'm not going to, in my opinion, look for any sort of short-term mean reversion until we at least start to put in a new uptrend. But I know every trader is different, and Paradise has made some big moves today, which I'll speak about in a second because his thesis does hinge on that 2021 high. So in the short term, wait for Bitcoin to start to put in some bullish price action, some higher lows, some higher highs before we get interested in longs. From a higher time frame perspective, well, this is undoubtedly a value zone. Obviously, you have the ultimate all-time high in 2021, which we are testing now, but then you also have the first all-time high at 64K. I think anything in this zone is what I would call a value zone for Bitcoin. I think as you start to drop below, that would be quite a worrying sign and probably spells like a much longer bear market for Bitcoin. If we did break below the 60K level, I think that would be pretty psychologically damaging because even in 2022, we only really traded under here for a few weeks. So it's pretty rare that you would trade below that level for a prolonged period of time. So if we did come and sweep, you would want to reclaim of that level pretty quickly. I guess the good news is for bulls, we haven't actually broken below yet. This is the first major retest, but it isn't looking great. And we're going to go through some of the reasons why that is the case. But firstly, I want to talk about the potential for mean reversion in the short term because there are a lot of traders now starting to come out, including Paradise, who's been absolutely amazing. He was actually one of the only traders in the market to call the top, or at least present the setup which ended up forming the top. This is on October 15th. He posted this at 112K and posted the setup all the way down to his target zone, as you can see, marked with the cross here at 72K. And this is pretty much played out exactly. So along that journey, he's taken multiple shorts. He's been documenting it all in the Discord and on his YouTube channel. I do recommend that you do subscribe. I'll leave a link in the description below to his channel. His video today is absolutely blowing up. It says 2,500 views. I think it's on 5,000 views in 3 hours already. So absolutely exploding, absolutely crushing it. And credit to him because he's been calling the market so well. And the level that he is looking at now is the same cluster that I've identified. Obviously, we do a lot of analysis together, and he's part of the Mars High Club. So naturally, our biases are going to be in lockstep a little bit. But he's actually identifying this as a potential mean reversion zone, starting to ladder into positions. You have to watch his whole video because he goes into the risk management in much more depth than me, and he's a much better trader than me, but he does talk about how he's looking at potential mean reversion for this zone, and he talks about the invalidation for that setup, and goes through his entire strategy for trading market reversals. You can see a similar strategy that I was talking about, waiting for strength to come back in. He basically marks out the highs with these resistances and looks for flips in confluence with the momentum indicator which he built, which is the money noodle, to look for reversals in the market. Absolutely freaking amazing trader. Make sure you do follow him. If you don't have the opportunity to be in the Discord, make sure you do follow his public stuff on YouTube, so go and subscribe. Henrik is also talking about the potential for a reversal. He says today is going to be the last flush before the weekend and then potentially a reversal. I can also see this happen. I do think this is obviously very weak, so it's hard to actually, play a reversal trade. But I do think you will see some sort of mean reversion in this zone, at least back up into the low 70K. It's probably going to happen over the weekend, in my opinion. I think you're getting a lot of ETF outflows, a lot of de-risking actually happening before the weekend. And I think on the weekend, you probably see mean reversion. That is my anticipation for the next couple of days for all of the low time frame traders. Obviously, high time frame, we're coming into major support here. Sentiment has definitely shifted. I want to talk about this for a second, like in terms of crypto in general, and then I'll talk about what's happening on equities, because there has been a big development since my video yesterday where I talked about how I was scared of an equities breakdown. Well, the first sign that I didn't really want to see has actually happened on the Nasdaq. So this is something we also need to talk about today. Make sure you do have notifications on, because these shows are becoming more and more important as hyper volatility is ramping up in this market. So make sure you watch every show as well. Like if you're missing shows, what ends up happening is that you miss updates. Like I've been talking about, the weakness in the market and how I'm not interested in longing, and how, we actually need to start making higher highs for the market to reverse. If not, I've got a bearish bias. So, if you only watch yesterday's show and then didn't watch a show for the week prior, the full picture of how the market's evolving wouldn't have made sense, because it totally depends on the price action that we're getting, and that is just the environment that we're in. So make sure you're actually watching every show, and that's why I've gone back to daily uploads, even though, I think AI in many ways is like higher leverage in terms of like spending my time right now. I do want to bring you daily updates because I think it's really, really, really important that I'm doing it now, because I think right now is like the most important time to be here for the community, not only for you guys, but also because I think this is also the most opportunistic time, because hyper volatility creates much bigger opportunities when it comes to capitalizing on trades. So I want to talk for a second about sentiment in the crypto space in general, because it's definitely shifted. Rana did a post here. CZ's saying he cancelled super cycles because we've had a Binance. Brian, Coinbase now focusing on longevity. Carl Samani quitting crypto. There was a post about him leaving. Vitalik selling off some ETH. And it's not just this. Like I've been speaking to a lot of OG whales and a lot of friends in the space. And it does seem like a lot of people that have been really bullish on Bitcoin for a long time, now for the first time in a long time, are flipping bearish on Bitcoin. Now, on one hand, this is like bear market behavior. When Bitcoin is in a downtrend like this, the sentiment is extremely reflexive to price. I doubt these narratives would be in the market if price was going up. But at the same time, you do have to read between the lines and look at actually what's happening. And I do believe what's happening is, and I'm not even talking about retail here. I'm talking about, the whales and the OGs as well. Like people are a little bit jaded, I think, with the space in general. They feel like the innovation in the space hasn't been as forward or as exciting as they would have liked. In terms of Bitcoin, I think there's a bit of a what's next question at the moment. Like Bitcoin essentially was pumped up by, the hype of the ETFs. Then it was pumped up by the hype of the DATs last year. But now that institutions are in, and the ETFs are in, and Trump got inaugurated, like what's the next thing for the crypto market? And I think that is a question I'm asking, a lot of other people are asking, like who is the next marginal buyer for Bitcoin? Now the obvious answer is sovereign funds, but the question is when are they going to allocate and how are they going to allocate? I think that's still 5 to 10 years away if it happens, and Bitcoin needs to solve quantum before it happens, which is clearly putting strain on the price right now, because a lot of institutions, funds, whales, they aren't like there's a tail risk now that wasn't as relevant last year and the year before, which is resulting in them allocating less. But the sell pressure is still just as alive as ever, because the OG whales that bought Bitcoin for 10, 15, 20K, and obviously way lower dating back to 2013, 14, 11, 12, they were buying it for $1, $10, $100, $500. These whales, they don't really care if they get an exit at 100, 69, 70, 40, 50, like they're still up multiples on their investments. So they're just looking to DCA out over time. And basically what's happening is an unbalanced book where you have a lot of sell pressure, but not a lot of buy pressure. And that is pretty much explaining the Bitcoin price action right now. Now, it's a little bit deeper than that, because there's obviously the equities component and the macro situation and some of the liquidity constraints that we've seen on typical indicators which impact Bitcoin positively. That is obviously hurting price as well and creating this reflexive narrative to the downside. But it's really as simple as there are more sellers than buyers. And until we know where that next buyer is coming from, there isn't a very strong narrative to push price back up. Now, the good news is if you're a Bitcoin bull, like that can change at any moment. And we've seen it in the past. We've seen announcements, shifts, something could, cause the dollar to come down and risk assets to go up, and Bitcoin could see mean reversion. Definitely in the shorter term, there could be catalysts for like a short-term reversal. I guess where I'm coming in is more midterm, like, where is that next marginal buy going to come from? I don't have the full answers today. It's a question I keep asking people, but that's also something a lot of whales are asking, and people are becoming concerned about it. And Bitcoin is reflexive as an asset. When price is doing badly, people start to get really concerned about its identity. When price is doing well, everyone says it's digital gold, and a hedge. So I still hold Bitcoin in my longer term portfolio, but I'm not like aggressively adding in this zone, maybe like I would have been in past cycles, because I'm trying to balance risk with the narrative of Bitcoin. And I do feel like Bitcoin is becoming more of an asset that really benefits those that are in during positive momentum, but really hurt people like right now during periods of negative momentum. So I think it's very important that you take momentum into account. And I'm even becoming more technically minded when it comes to my Bitcoin position management, because I'm just not willing, from a risk perspective, and everyone's different, to suffer the big drawdowns that come with the market downturns. I would much rather play more of a momentum game, and I feel like that's the best way to play crypto overall. So right now, obviously momentum's completely lost, and you do have to start asking yourself, some tough questions. I'm still holding some in my long-term portfolio. It's just, and if you watch yesterday's video, I explained why I'm 45 to 50% cash. It just hasn't compelled me to like go and buy a bunch more Bitcoin. I'm going to consider maybe DCAing a bit more, but I'm actually considering keeping my crypto weightings relatively similar and continuing to weight heavier in things like gold and equities as they come down, and we'll discuss that in a second. And then, we'll probably have to get this in a future video because I want to keep this video short, but there is the broader crypto space as well. And clearly the weak performance of a lot of the new launches on major exchanges like Binance, the shortening of VC funding in crypto relative to AI has kind of caused this exodus in the space as well, not only from retail, but also from allocators like LPs, funds that were previously allocating a lot to crypto that now aren't, because A, the returns aren't good, and B, they're simply more interested in other areas that they deem more exciting, like AI. And that's taken a lot of liquidity out of the market and has resulted in structural issues for the altcoin market. And then, of course, at the same time, you have a lot of miners pivoting to AI because they have obviously a mandate to optimize their energy, and AI obviously commands energy to the department that's going to give them the most profitability. And right now, contributing to AI, contributing to GPUs, GPU power to power AI and models, that's a lot more profitable for them than Bitcoin, especially as price goes lower. So there's also this reflexivity where as Bitcoin goes lower, even more miners leave the network and hash rate goes down, security goes down. And we'll get into quantum another time, but that is another factor right now. And I like this post from Wishful. It actually summed up kind of what's happening in the broader market right now, in the altcoin market. He says, Sol versus ETH versus another chain is pointless because nothing significant happens on any of them. Stablecoins are very niche and ultimately don't change anything in the grand scheme of things. And I don't agree with all of this, but I'm like, this is the sentiment of a lot of people right now, right? I don't think anything built on blockchain scales currently, including the perp exchanges. Very far from obvious for me. Perp exchanges can scale to CME level. Bitcoin reason for existence completely lost behind number go up. Same goes for most of crypto. Token design mega broken. I 100% agree with this. Look at the new launches. They've been down only because, the way that the price discovery happens in private market and then dumps on launch, that's been difficult. And but he says, despite all of this, I'm somehow optimistic for the industry. So all of these points I think are somewhat true. What I will say is that there's still a lot of innovation that can only happen on crypto. So AI agents, for example, crypto has already found some PMF in the small experiments we've seen in OpenClaw in terms of agents interacting and incentivizing each other. But the crypto rails are much better suited to the agentic economy than any other rails. Tokenization is massive. I actually went to Abu Dhabi and met a lot of the key leaders pushing this forward, and they are investing a lot of capital in RWA, and this is a trend that's happening. Look at Cantor Network, for example, and the TVL expansion that they've seen. Tokenization is happening. It makes lots of sense. Tokenized stocks, tokenized treasury yields, of course, have been something with major product market fit. Tokenized real estate. Tokenizing private blockchains for more efficient workflow systems across cybersecurity, quantum resistance, like all of this is happening. So there are amazing use cases for blockchain, and you are going to see blockchain be absolutely transformative as a technology over the next 10 to 20 years, especially because of AI. Like AI and blockchain are a match made in heaven. I think what people are now realizing though is even if that is true, it doesn't necessarily mean number go up. It can mean number go up in a very select group of assets that benefit from this, but number may not go up overall. And Bitcoin could actually go through an extended period of outperformance versus the strong basket of alts. That's also something you have to consider in your framework. So I'll do a video on altcoin positioning later, but just wanted to toss some ideas and current thoughts out. Want to reiterate, I'm not bearish on crypto overall. I'm actually quite bullish on crypto overall, and I still think it's the best industry to be involved in alongside AI because the liquidity and the exponential returns through network effect are massive compared to other industries. So it's still really, really worth my time to be here every day, and that's why I'm still making videos every day, and I'm still engaged every day. However, the framework that we take to the market has to be a lot different. And the type of stuff we invest in has to be different. And the way that we approach the market is not like previous cycles of just let's hold a huge altcoin portfolio and hope it all goes up with alt season. Now we have to be much more selective with the assets we do hold. We have to be willing to suffer drawdowns in pursuit of greater returns over the longer term. And then with a probably even more significant portion of our portfolios, at least in my opinion, for myself, I'm dedicating more towards trading and momentum trading. And really, really, really paying credence and respect to momentum over just blindly holding. And this has been a shift. If you've been watching my content since the beginning of last year, this is a shift I've been making throughout the whole year. And it's one of the reasons I've stayed relatively well capitalized in cash throughout the entire year. And of course, I'll let you know if that changes. But my approach is to be much more cash denominated at all times, even when the market is going up, to give me flexibility to get into trades when there is momentum instead of being handcuffed in positions all the time. I just want to remind you though, this current downturn, although you might be thinking, oh, it's all about crypto, it's not all about crypto because look at equities right now. I really want to speak about this chart because I showed this on yesterday's show. So you have this channel on the daily since mid-2025 on the Nasdaq. You can see higher highs and higher lows. It's finally starting to make a lower low. So this is the first warning sign that I said, if we break one lower low, of course it can be deviation, but if we break one, this is a warning sign we can pull back to the bottom of the channel. And once you start flirting with this zone, then that weekly breakout level is looking quite scary. I don't know if we're going to get there, but it's something I'm paying attention to. And if you want to look at 4-hourly structure, we have broken this low. So we've come back down to another key support at 24. If we break this level, then the next support is at the low end of the 24 range, which is actually just under the channel. So that would be a full breakdown where even if we did come down to these lows here, I'm just drawing out the lines manually, breakdown from the channel, this is not looking like very good momentum on equities. Like I would expect, even if we came back up, price to probably distribute and trade lower. So look, obviously we haven't cleared this level yet, but this is starting to look a bit dicey. And as I said, this was the first warning sign for me that things were shaky. What's happening basically, TLDR, is a lot of investors are realizing that the amount of capital that companies like Microsoft are spending on AI is not necessarily being justified in their bottom line yet and may not be for a matter of years. And I think the risk factor for a lot of these investments has increased, resulting in, the entire space is a little bit inflated, we have to admit. If you do look at the weekly channel, you can see it's basically been up only for a matter of years. So investors are now starting to question the valuations of these companies, and that has resulted in a bit of a de-risking, which I do expect to continue throughout Friday ahead of the weekend. This de-risking is not just across equities. Oh, by the way, Nasdaq weekly breakout would be your target zone for buys. If we did get down here, I'd be buying really heavily. Probably means Bitcoin's in the 50Ks, to be honest, because this would be quite a big sell-off in risk. I think a lot of it is being front-run, but I would love this, honestly, as an opportunity to buy. That it's not even a huge pullback, honestly. It's like 11% on stocks. That would be fantastic, and that's probably where I would buy Bitcoin like a lot heavier instead of trying to catch a knife here, although I do respect we could see mean reversion as we are in, as I said, like a value support zone. Silver's absolutely tanking, and I got to say this chart doesn't look great. If you're in silver, I'd be a little concerned because you have your highs, and if you do look at it on the monthly chart, it definitely looks like potentially a multi-month top. And then if you go back to the daily or the weekly chart, you can see we failed to, we had a small impulse move, but we failed to make any sort of substantial move to the upside, and it's immediately slammed back down. And now you're testing these lows again. So of course, this is a support cluster, but if you break here, decent chance you come back down to that $50 region and, silver chills out for a little bit. Looking at gold, it looks a bit better, and I actually prefer it for my portfolio and my personal needs to balance out risk a bit. And, it doesn't always trade against Bitcoin, but at least recently they've been kind of anti-correlated. So if you hold some long-term Bitcoin, then holding some long-term gold is a decent hedge. But right now, it also looks like it could be rolling over again. So you have your highs, you have your attempt to break back to the highs, but it failed, and it looks like we're getting distribution again, although the price action looks slightly better than silver. I still expect gold, though, to push back down to the 4,400 level over the next few weeks, and I'm just buying more gold on all the dips. This isn't something I'm trading too much because, it's the biggest asset in the world. It's just something that I want to stack and provide myself a bit of protection. Silver actually could be a very good trade. The only thing is, I don't want to preempt this trade. I want to wait to see maybe if it comes down to 50 first. So, yeah, cool. I have to go now. I've got some friends waiting for me at paddle. I'm actually going to be very late, but I actually wanted to just do this video beforehand to make sure I get a video to you guys. So I'm going to try and probably not chill out. I'll probably just play some paddle, come back, and then I'm going to prepare for Sonnet launch, which, by the way, got delayed. That's the new Claude model, and just continue hammering away on the charts here because this is exciting. I know it's also scary if you're losing money, but this is fucking exciting because we just haven't had many good entries on risk assets in so long. And as a person that's been so heavy in cash, I definitely have dealt with underperformance from an opportunity cost perspective for a matter of months last year. So now seeing gold come down, equities come down, Bitcoin come down, I love it. I'm just not rushing positioning because I think momentum is a powerful thing in markets, and you always want to be on the right side of momentum. I'll see you in the next one. I'll see you tomorrow for the Fabian show. That's going to be huge because he has a great macro lens on the market. I'd love to hear his take on what's happening. And then I've got some nice content dropping for you over the weekend. So we'll keep it rolling on the channel. See you later. Peace.